Hi everyone, hope you're all doing well, and today I'm going to talk about the three stocks that I bought last week. So I bought these three stocks. I'm probably going to buy a couple more stocks this week. I'm going to probably try focus on a few stocks that I've not bought for a while this week, so we'll see what happens there. I am getting a bit lower on the cash pile now. I think I'm only around about down to 5, just gone below 5% now, so I think I'm actually around about 4%. So the cash pile is starting to go quite low now because I've been buying a lot of dips. But these are the last three that I did buy, and we'll go through these ones that I bought. I won't be doing a deep dive into these ones just because it'd be a quick fire. If I did 3 deep dives, it'd be a very long video. I probably do have, I think I do have 3 deep dives on these 3 stocks on that I'm about to show you anyway. So if you do want a bit more information, you can go check those videos out. If you do want to know when I'm buying and selling companies in real time though, make sure you join the Patreon. Link is in the description. Post real buy and sell alerts on there, as well as 2 exclusive videos a week, and also a Discord of 600 members to talk to about stocks. And if you do want to start investing, it's a pretty good time, isn't it? Join through the free trade link in the description. You also get a free share as well. Now, number 1 is going to be only 60 seconds long because I've covered it twice this week already on, twice last week on videos that were quite long. And that is Boohoo. So I bought Boohoo quite a few times last week. So I put this video out about Boohoo stock crashes, time to buy, that is about 25 minutes long. That's quite a big deep dive into Boohoo, so if you want any more information on that one, go check that one out. And also this video that is going to go up in a little bit, which is I had to sell this stock, which is talking about that when I bought another time, I actually sold half of my position in Greg's for 100% profit, and then I moved that money into Boohoo. So I bought Boohoo a few times last week, and like I said, I'm not going to cover it too much because I've done 2 recent videos on it, and those 2 recent videos will give you a lot more information on what I could do in these next few minutes. So number 1 was Boohoo, as you guys already know from these videos, and like I said, if you want more information, check those videos out. Number 2 was DraftKings. So I did buy a little bit more DraftKings last week, so I'm kind of looking at maybe holding off a little bit of buying DraftKings now. But the more I see this stock at these stock prices, I'm going to just absolutely buy it. The thing with DraftKings, when I got involved with DraftKings, I knew that the stock, I've been in this stock probably since about March time this year, so it's still quite a very new investment for me. So I'm not too worried about the stock going down in general, because in the first 12 months, the stocks can go down when you do start buying them. So I'm not too worried about it actually going down, because then I can get my average lower. The only thing that's really took me by surprise with DraftKings is the fact of how low it has gone. When I started buying this stock at $50, $60 around the March time, I knew that I was buying that company at a fair valuation. But as DraftKings has pretty much grown its revenue over 100% this year, that valuation has dropped such a fast amount. And then going into next year, with what DraftKings could potentially grow, the valuation now on DraftKings starts to look a bit more on the cheaper side. So the big thing with DraftKings is the valuation that I started buying at was a little bit of an okay valuation. It definitely wasn't an undervalued valuation, but now it has dropped to a massive undervalued valuation because the growth is now double what it was when I started buying it. And the big thing is now the share price has over halved from when I started buying it. So if you look here from DraftKings point of view, this stock originally was $40, $50 when I started buying. I went all the way up to $70, which is absolutely crazy to think at one point we were a $70 stock. I mean, from that point of view, we're down 60%. But my average was around about that $60 mark. And since then, the stock has pretty much halved. So the big thing as well is that you've had the valuation catch up because it's grown over 100%. And the big thing now is that it's lost half its value. Now, like I said earlier, I always knew there was that risk with DraftKings that it would lose, potentially in a bit of a market that doesn't want growth stocks. You could easily see this going from 70 to 60 to 50 to probably 40. I never really thought we'd see it go to 30 and then potentially even a little bit under the $30 mark. I mean, if you look there, we even touched the point of $25. That's what I couldn't predict. I never thought we'd get to a position where we would actually lose over half the value in the share price. You've always got to be aware you'll have drops, but I thought, wow, that's a massive drop. So you've got a company here which has lost within 3 months over half its value. Now for me, I look at DraftKings in the last 3 months, the whole sector's out of favour, and I look at DraftKings and think, is there something with the company that has deserved it to lose half its value in the last 3 months? No. And the thing I think about when it's lost half its value is that, like I said, I could justify a little bit of a drop on it because it is a high growth stock. It's there's no profit on it, and people always use that against it. But the thing is that this company has been absolutely amazing all year. So for it to lose this much value, I'm just like, wow, I didn't expect it to lose this much value, but I will take it and I'll just keep buying more and getting the average down. So personally for me now, I've got my average from something like around about just below $60. I think we're touching like 45-ish on $45 average now. So yeah, the longer I can keep getting that down, if I could ever get to the point where I touch like a $40 average, I would not have believed it like a few months ago, but I will take that. And the big thing with me and DraftKings now is that it's one of the most companies I've been confident on for a very long time. It's the company I've probably been most confident on since the likes of like Square and Shopify. I would like to say Tesla, but to be honest with you, I never was like so much confidence in Tesla. Like I still thought it was going to do well. I never thought it would do as well as what it has done. I always thought it had a lot of potential going forward. But it's the first company I've seen since them sort of stocks that I've gone, wow, you look at this company here, it has so much potential going forward. And at the moment it currently sits around about 11 billion on the market cap side of it. This is a company that I can easily see, there's a clear TAM growth here, and there's a clear revenue growth, and there's a clear path to profitability. So with all that combination coming in, when this is sitting at 11 billion company, without doubt I see this company expanding to being a 100 billion plus once this company matures and it has a lot more states open. And I also think the great thing with DraftKings as well is they have a really good CEO in Jason Robbins, and I feel like what he will do is keep expanding this business. It won't be a business that kind of stays stagnant and basically stay in fantasy sports betting. I think they'll expand to actually add in other revenue income streams that we are far thinking about. They started thinking about adding in like NFTs, for example, but I think there'll be other things as well that we aren't even considering that they're probably working on in the background, because the management team likes to be really ahead. So I think this is a company as well that will be very innovating and makes new income streams into this business as well. And when you have a company like that, when you add in extra income streams, that's what also makes it an even greater company than what it is right now, which I think is really important to say. Now, like I said, the big thing here is the TAM. The TAM of sports betting is going to be absolutely huge. We already know it's only allowed in a few states. The more them states are allowed, which will happen without doubt, because it's a nice little tax bonus for all these states. When it gets allowed in all these states, the TAM will just grow bigger and bigger. And the big thing is this TAM is growing even faster than the analysts were expecting. So you can see here, this was the previous projections of what they were expecting the TAM to be, and that's growing even more and more and more. And if DraftKings, for example, can take 30% of this market share, which would be a very healthy chunk and very easy, not easy, but it is possible for them to take that amount of share. As the more of this TAM grows and they take roughly 30% of that market share, that will translate into their their revenue, and they will eventually turn that into the bottom line. And yeah, obviously we know as people from the UK that has a bit more of a mature sports betting online presence, that we know this is very successful for companies, and it will be for DraftKings as well. Now, the big thing that I always see used negativity against DraftKings is the amount of money they burn through. People always say, oh, they've got good revenue growth, but look at the money they burn through. Now, the only reason why they burn through a lot of money here is because when states come online, their big thing is launch it, join us, we'll give you so many offers and everything like that. But then what happens is them companies stick to that platform. And if they stick to that platform, or if they come to your platform first, normally them people that do stick to them platforms will be with you forever, and you will make your money back. Now, a prime example of that is New Jersey. So New Jersey, this is their launch date, and you can see here, this is the revenue. Next year, you can see the additional people that use the platform come in. You don't lose as much money. You get to the second year and the third year, look at the revenue added in and look at the amount of profit every state makes. Now, what tends to happen is it's between 2 to 3 years every state becomes profitable, and that's called when it matures. And even then, the states are still growing at absolutely a massive amount. You look here, the states still grow 30+% even after that period of time. So you're still going to have states that when they get to this period will still be growing at absolute crazy rate. And the thing as well is like there's proof that this company can get to profitability. For me, it would be a totally different case here if we were talking about DraftKings. Oh yeah, they're growing this much revenue, but look how much money they burn through. Oh, that's a little bit of a tricky thing. But when you understand the business model, if you understand the marketing cost, if you look at there is the path to profitability here. This is why I'm actually confident to invest in this one, is that it has the vision to get to profitability. It's doing it. The evidence is there. So yeah, I'm happy with that point of view here and how the business model does work. And that's the big criticism that people have had against this one. And just to show how good of a year this is, and it's not reflected in the share price, is that when we went into the year here, you can see that they raised their forecast for 2021 revenue to be in the range of 900 million to 1 billion. And the previous target was 750 million to 850 million. So they have, when we went into this year, they raised the targets to 900 million to 1 billion in revenue. Now, if we fast forward to where we are right now, they're actually going to do somewhere between 1.24 billion to 1.29 billion. So what DraftKings are here is they're executing amazing, because you look at they went into 2021 raising their outlook to 900 million to 1 billion. And you even look now, on the bottom line point of view, that's nearly, they've even achieved that even after an upgrade to nearly 300 million now. So the company is doing amazing. And the big thing for me is that when they've also set out their 2022 guidance, which was in 1.7 billion to 1.9 billion, which basically most analysts were expecting, which is currently 43% growth. Now the reason why is because we're probably going to do somewhere around about 1.3 billion-ish, just short of 1.3 billion-ish if we have a good Q4. Now, what you're going to do is they've made an acquisition of GNOG, so that's going to probably push it up to about 1.5 billion. So from 1.5 billion to 1.9 billion, I can easily see them outperforming that, and that's why. And also on historic growth numbers, you'll be able to see that they do tend to grow really quick. If you just look at the revenue growth here, this is there's not such a long period because there's not too much data, but you'll see here, look at the growth they historically do. 191, 226, 323, 614, and then potentially they've got 1.144 here. So you can see the massive history of raising revenue. It depends a lot on state launches, but I can easily see them being 2 billion next year. And obviously, once you take that into consideration, that valuation just drops and drops and drops. Let's not forget, if we talk about 11 billion, they do 2 billion next year. The valuation just keeps dropping faster and faster. And hopefully as well, what we heard from Jason Robbins in the last conference call is that they're actually going to give us an update on the profitability side next year. So they're going to give us an update on how New Jersey's doing and a couple of states that will be joining New Jersey in the more mature side, and how that's doing as well. So that would also hopefully get rid of some of the negativity about the profit side as well when we do get that update. And the last stock was Asos. So I did pick a bit more Asos. Basically, Asos is tied to Boohoo. So every problem that Boohoo is currently having, basically Asos is having them as well. A lot of logistic issues. There's a lot of worry about events being cancelled, people not going out because of variant news. So Asos, Boohoo, you'll see the charts are very, very similar. And yeah, I picked up a few more shares on Asos. Asos is nowhere near as big as my Boohoo position, just because I think Boohoo has its own products, and also it has the slightly better growth than Asos, which makes me more interested. But once again, you look at Asos' point of view, it's currently trading quite low on its metrics point of view. If you look historically on total enterprise value to revenues, you can see here we're mostly around 2s, 1s, couple of zeros here when the share price last fell off, but even then, the worst one was 0.67, and look at where we're at right now, 0.53. So we are currently at the lowest valuations it's ever been on a revenue point of view. If we look at the price normalized earnings, you can see here 60s, 70s, 50s, and then down here we're down to a 22 here. So lowest valuation metrics on revenue, lowest metrics on profit as well. So from a metrics point of view, it's really standing out because of this massive drop that it's had here. And if you look at the company history, it's always had a history of growing that revenue. Profit has been in and out a little bit on 2019, and that's when it last dropped to these metrics and then recovered. But since then, obviously, it's done very well. And also from a financial health point of view, it's pretty healthy on its balance sheet. It's took a little bit of debt on recently, which I think was to do with the Topman acquisition, but still a very healthy balance sheet. Now, even though Asos is going to go through a CEO change, they have set out their plan going forward of what they want to do to expand. A lot of that is by still increasing its revenue, and also then making the company a little bit more profitable as well, with having a lot of its own brands, and that's why obviously it acquired Topman recently. So it will increase its margins, means more profit, and also still expand exponential revenue, which it has previously done, is how it wants to turn around that share price. But I think naturally, when we kind of have the variant move out of the way, people carry on going out, and also a few of the logistic issues calm down, I think this will see it move in the right direction, probably around the same time as when Boohoo moves down in the same direction as well. So those are the 3 stocks that I bought last week. I hope the video was useful. If it was, hit the like button. Let me know what you bought in the comment section below. I always like hearing what you guys bought, and I will see you on the next video.